U.S. futures marginally higher in the Asian session. They've really struggled for direction throughout the day. The S&P 500 wiping out earlier gains in the New York session as well. Tech did underperform with Treasury yields rising. Of course, we had more positive PPI numbers with those easing for the month of July, the first fall since early in the pandemic. Of course, we had the CPI numbers also cooling a bit. But some analysts saying, this 1 month print does not necessarily indicate a dovish pivot for the Fed. So we have this push and pull in the markets right now. Let's bring in our next guest to discuss where we're headed from here. She's focusing on using liquid alternatives as diversifiers. With us now is Shana Sissel, president at Banríon Capital Management. Shana, it's good to have you back. So why are diversifiers important in this very volatile environment? And what do you mean by liquid diversifiers? What do you like?
So volatile environments is exactly why you need to reconsider how you build portfolios and add additional ways to diversify. What I mean when I talk about liquid alternatives, I'm talking about things that are hedge fund-like, but trade on the public market. So they're ETFs, they're mutual funds, but they're using strategies that are typically or historically only seen in hedge funds. They use options, derivatives. What they are at their core is a hedge strategy of some sort. So they are actually doing quite well and have done quite well throughout the year because the volatility in the market has benefited these types of strategies. So there's a couple I really like. One of them is MRSK, which is a equity fixed income with a option overlay that's managed by a firm called Taze. It's a risk management. It's called the Risk Blueprint Fund. It's a very interesting strategy. There's a tactical aspect to it, so it provides that hedge, but also can give you equity exposure. I also like BTAL, which is AGFIQ, Equity Market Neutral Anti-Beta Fund. It goes long and short. It's long, low beta stocks and short, high beta stocks. Another fund that's done quite well, there's a product called iVol, which takes advantage of these highly volatile markets.
Right.
So there's a couple of different ways you can do this. And I do think these types of products are important when the market is like we're seeing, where we have these whipsaw events, you have rates going up, so equities have headwinds, and so these products really do serve that hedge.
How are you factoring in the state of the economy? Because it seems data right now points to still a resilient U.S. economy, but at the same time, for how much longer can consumers continue spending this much when prices continue to rally?
Well, I've been pleasantly surprised with the resilience of the U.S. economy, but the one thing that really stood out to me on both the CPI and the PPI reports for July was, wow, we saw energy prices decline. And we've spent a lot of time talking about pain at the gas pump and how that was impacting consumers. We've seen, some of those numbers come down. We saw airfares come down, some of these things that were immediately being felt by consumers. But Harris Poll did a survey recently, and 90% of Americans are concerned about food price inflation. And the one thing that has not subsided and not showing any signs of, coming back is food prices. They were actually up 1.1% in July, which is an increase even from June. So this is a serious concern. And consumers in Main Street, as we like to refer sometimes to individual U.S. consumers, are really feeling that pressure. And I think that is something I would be concerned about.
Shana, what have you been looking for in this round of earnings, particularly when it comes to guidance, if you're trying to work out the businesses that are looking more resilient to the economic uncertainty?
Well, I've been actually really surprised at some of the more speculative growth names having better than expected earnings reports. We had Rivian today that surprised in a positive way with a smaller loss than expected and on target to meet their delivery goals. We had Uber have better than expected earnings. These are stocks that I wouldn't necessarily have expected that from. So I think that's a good sign, although I'm still not willing to dip into some of those areas right now. I want to focus on quality companies with good long-term tailwinds. And those names are not necessarily those speculative names. But I am encouraged by this, and I do think that a lot of the guidance has been better than expected. Now, I want to make sure I point out that it has been broadly negative, which we expected, but not as negative as we had been anticipating. So these are positive signs for the economy, but I also think while they are positive signs, what it means is that the Fed is going to continue to be hawkish and keep their foot on the gas pedal. And that is something that I don't think the market has been anticipating, that they will stay on the gas pedal for a significant period of time.
You know, Shana, you talk about those kind of, I guess, pandemic darling, even meme stocks or speculative tech names that have seen this big rebound. Take a look at this chart, which shows that basket of really profitless tech, or non-profit tech, if you will, that's up nearly 16% this month. Just, you know, obviously we're just a few trading days in still, outperforming the S&P 500. And this is with a Fed that is potentially more hawkish, right, than we've seen at the start of the month. So what does that tell you? And I guess, how do you separate what is still perhaps speculation in growth in tech to the tech names that have actually meaningfully recovered and might find some more value going forward?
Well, this, along with the fact that non-dividend paying stocks have been outperforming dividend paying stocks, tells me that there's still excess liquidity in the markets, which tells me that the Fed is probably going to continue to be quite hawkish, and that we have not seen the worst of, you know, the rate increases. And as we've been hearing from folks like Mary Daly and Neil Kashkari, they intend to continue this rate hike process for as long as it takes, in their opinion, to get inflation under control and stable, which is different than just seeing a couple of prints where you see the inflation coming down. I'm concerned that you're still seeing non-dividend payers and these more speculative growth names do well, because it's not necessarily what I would expect. So that means to me that there's still downside in the market that we have yet to see.
Shana Sissel remaining a little bit cautious, right? Banríon Capital Management President, thank you so much for joining us. You can get a roundup of all of these stories that you need to know to get your day going in today's edition of Daybreak. Terminal subscribers, go to Daybreak.